Hi guys, good morning. Happy weekend to everybody. Hope January is treating you well. If not, take a step back and then try to pause, think about what you're doing which is not right, and then try to come back. So January is fast ending. I really thank God for that. We are slowly entering the month of February, and I believe February will have more better price action, more better delivery, and that is it. So today I will be throwing a weekly focus on the US dollar index, Euro USD, GBP USD, USD JPY, and USD CHF. If not gold, okay. If I have the time, I'm going to do gold. So the US dollar index has been super crazy, super volatile because of whatever Trump is trying to do, of course. So we're going to go fast and then we start from the yearly time frame. All right, I want to start from the yearly time frame because there's something very important I want to show you from this place. So last year's candle, this is last year, 2025, and if you look at it, we had a very beautiful run of liquidity above the high of November, and then price attacked this fair value gap, and then we closed as a break of structure, definitely aligning this whole movement bearish. So we have a yearly supply here, and then this is what we have as liquidity currently. So our closest drawn liquidity right now is our previous yearly low, which is that, and then the yearly low of 2022. So these are closest draws of liquidity if price intends to go bearish. Now, if you look at yet last year's candle, the first thing you're going to realize is it was heavily bearish and sellers are basically in the market. So it is so safe to sell than buy. Now we're going to move from this yearly time frame straight to the monthly time frame because there's nothing else to say in between. Now this is the monthly time frame, and for a while, let's say since last year May, dollar index hasn't been really doing so much. All it's been doing is accumulating around this area. So what do we have here? We had price coming up. That was in the month of November last year. We had a run of liquidity above that point, and then December came in, we were bearish, and then this is January. So if price intends to keep going down, price is obviously coming for our yearly low. So this is the yearly low of last year, 2025. Now, if there's something I want you to note is coming into this month of January, I wanted to see how price takes out. This is last month's high, previous monthly high, but then this high has been protected on dollar index. But then when we move to Euro USD and the other guys, you're going to realize we have some slight SMT divergences, but then nothing to worry about. So currently, this right now, we've taken out December's low and we've taken out October's low. So everything being equal, with how bearish the US dollar index is currently, price is basically going to take out the yearly low of 2025, which is around 96. Yeah. 96.21. So that is where price is basically going to. Now let's move straight to the weekly time frame and see how we could align our weekly time frame to the current bias we have picked from the monthly time frame. Now this is our yearly low there, and then this is what we have as a weekly candle. So last week in my Telegram channel, I had to drop analysis on US dollar index, and we basically had a sell on US dollar index reacting from this point. Beautiful one. So when the week opened, price basically did not take out previous weekly high, which was also SMT divergence between dollar index and Euro USD. We just have a continuous bearish week, meaning from Monday to Friday we've been heavily bearish, and right here we have price violating this demand zone. So this was a demand zone price was basically reacting on, that gave us this pullback movement back to the supply. So right here, price has violated it, and you know what happens if price violates this zone, and then we have this as a break of structure, another fake out. Price is basically going to do a break and then a retest. So the only thing I'm looking to do this coming week is to sell the US dollar index. On Wednesday, we're going to have FOMC. So I'm really waiting to hear what FOMC does, whether it's going to put in demand or more supply into the US dollar index. But then structurally, this is what we have. The weekly time frame will align bearish prices, destroy this demand, and obviously this demand will become supply. So if price does a retest, perfect, we enter more sales. But then if price opens and then we have just more sales to the downside, obviously I'm also going to sell. The worst thing you could do here is trying to say that you want to buy, and then when price comes to a key level and then you sell. Never do that. Do not count the trend. So all we're going to do is look for sales. Now this is the whole demand zone on the daily time frame which price has violated. Like I said, this is what we're going to have. If price can give a slight retest, we are going to sell off. Or if price opens with a straight continuation to the downside, all we'll do is we go to the lower time frame and then we pick an entry. Now on this 4H time frame, all we have continuous sales to the downside. Now yesterday, Friday, price gave a very beautiful one around the zone, which was a clean mitigation of this 4H fair value gap, and then after a while we aligned bearish by closing below this, and then we have continuous sales to the downside. So as of now, if price could also come back in inside this area, okay, which is a demand zone which has been destroyed here on the 4H time frame, is basically a fair value gap. So if price could make its way there, hopefully, and then we align bearish, after that I will go in line with the already established bearish buyers, because it is more safe to do what, to sell, than even try to buy. In fact, buying is a taboo. Trying to buy dollar is crazy with all the economic instability and all of that. You should not even try buying dollar, except you see visible buy pressure coming into the market. But then this is what I'm looking at on the US dollar index for each time frame. A retest and then sell alignment, and then I sell in line with the already established drawn liquidity, which is our previous yearly low. So that's that for the US dollar index. Let's go straight to Euro USD. Now I trade only US dollar pairs because it gives like 100% correlation. If dollar is bullish, then it has negative correlation with Euro USD, and if dollar is bullish, then it has positive correlation with USD CHF and all of that. So it makes life really, really easy for me. Now let's go straight to Euro USD. Now if you understand your directional bias for dollar index, then Euro USD is a piece of cake. Okay, so yearly time frame overly bullish. Okay, very, very, very bullish. And if price has to keep pushing up, we're going to take out this, which is our yearly high, and then we're going to take out this, which is the high for 2021. Yes, so these are the closest draws on liquidity on the yearly time frame. Let's go straight to monthly. Now, same thing I said on the US dollar index. Since last year May, price has been in this box. Okay, price has been in this box. Sellers try to enter, buyers keep coming in, and at one point I feel like, okay, there is this zone here which is stopping price from pushing to the downside. I believe you can see. So around this area, it acted as a supply, acted as a resistance here, and then price is doing some sort of break and retest. So this break and retest will basically channel price to the upside. If yes, let's check what is currently happening right now. So this is the SMT divergence I told you on dollar index. So coming into this month of January, okay, price has rated the low of excuse me, prices rated the low of December. So December's low has been taken out, and if this December's low has been taken out, we had like massive buys. Same setup I sent in my Telegram channel. So if you're not in my Telegram channel, just indicate and I'm going to send you the link so that you can join. Okay, so price rated this, and as fast as possible we rallied, we took out December's high, and currently our next drawn liquidity is basically our yearly high, which is around 1.19 thousand. So price is basically taking that level now. Have you ever seen a weekly candle this huge? Like, when last did you see a weekly candle this bullish? Like, it's been so long, so long. Now, there's one thing I've realized about these guys now. When the year is just starting, these guys put in a lot of demand. This is like last year, February or March, early March, and you see the kind of structures that was basically building up. And this is the same thing these guys are planning or are trying to do right here. So this is us in January, and we have this much movement coming in from this demand zone. Perfect. Like I said, um, previous monthly low liquidity was rated, and then price tapped into this demand zone, and since then price has been pushing up. We've had a rally up to this area. We have this currently now acting as some sort of break of structure from this level. So if you want to look at this, you will understand that like the whole of this point had been some sort of supply. Here liquidity was taken, it sold, price came back into that same point, it sold, and right here price has destroyed it. So the whole of this zone now will be some sort of break and retest. Same thing I told you guys on dollar index. So if price has broken it and if we have it as a true breakout, then we're going to have a retest, and then we're going to have more buys to the upside till we take out yearly our previous yearly high, everything being equal. So if I'm looking to buy Euro USD this week, what am I expecting? I'm expecting a slight pullback into this refined supply turn demand, okay, here, or I'm just expecting to see more bullish price action till we take out this level, everything being equal. Now, one thing I want to look for this coming week is probably another SMT divergence, because the way Euro is so bullish, Euro might take out yearly high first before dollar index goes for the yearly low, and in that case, like, a lot can happen. So if the week opens and then we have some sort of pullback, I'm going to buy. But then if price rather goes bullish and then attacks this level first, which is a yearly high, I would then now try to understand what price is doing. And then, like I said, we have FOMC on Wednesday. I want to understand the dynamics on what price is trying to tell me, because this could just be price coming to this high to run liquidity above this, and then we rather have sales later on. So we have to be super patient to understand what is happening. But then it is better to buy than sell. Of course, it's very better, very better. So this is the whole level price reacted from. That was last week. Like I said, I get this buy set up in my Telegram. If you haven't joined, make sure you alert me. And then at one point, I thought during the week, okay, sellers were going to come in, because my whole buy was to TP around a weekly fair value gap. And when price took that weekly fair value gap, sellers tried to enter, but then things did not happen like that. And yesterday, Friday, price had to push to the upside, which is fair enough, and it's really great. Perfect. So right here, like I said, if this week opens and then we have more buy pressure, I will just wait and then understand what price will do when it takes this high. But then if we can have a retest, then that would be perfect. We have areas like I said, I don't want to do refinements on the weekly time frame. This is a weekly supply which has been violated. So on the daily time frame, all you do is wait for price to come back into that zone, and then the moment it aligns bullish, that's it. So on the 4H time frame, this is like a 4H fair value gap and all of that. Like I said, I wouldn't want to mark any special key level along or around that area. All you do is wait for price to come back in that zone, and then the moment it switches bullish all over again, then that's your sign to buy. Okay, so this could be option one, and then option two could be like more buy pressure coming in, and then the moment it takes this yearly high liquidity, then it breaks to the downside. So just watch out for this. Like I said, the way price will move will determine how we are going to engage it. But then we have more buy pressure coming to the market, and we already have a predetermined draw on liquidity on Euro USD. So that's that. Let's go straight to the pound. So pound too has been heavily bullish, super bullish. Let's go to the yearly time frame, and then we try to understand, and then we pick a draw on liquidity. Now in trading, direction is better than speed. It is better you know where price is heading to than you having that excitement to put in lot sizes and tell yourself, I want to make money. In trading, you pay for any little thing, you pay for your ignorance with money. So it is better you go for knowledge first, understand what and where price is heading to before you put in that money to trade. So let's go straight to GU. So this is GU yearly time frame, super bullish year last year, and obviously I'm expecting more buys this year. Now first drawn liquidity is basically our yearly high, which is around 1.37 thousand, of course. So I'm expecting price to come for this. The moment price comes for this, I'm definitely going to watch out and see whether more buy pressure will come in, and then we start taking these other guys as draws on liquidity, or the moment price is going to take this, we are going to maybe rest for a while, and then sellers are basically going to come in. All we have to do is wait and watch. That's how trading is. You wait and then you watch. Now this is what we had here. That was I believe November. The moment price took out this fair value gap, and then we aligned bullish with CRT. We closed above this. It was obvious that this month of January ought to have been super bullish for the pound. So this is our yearly high, which is our current drawn liquidity. This. So my whole game plan coming in this week on Euro USD and GU is watching how price takes this yearly high liquidity. If price takes it and then we have more bullish price action, we'll definitely push up. But then if sellers come in, we're definitely going to push down for a retest, of course. So this is our drawn liquidity on the monthly time frame. Let's go straight to weekly and then try to align structure with our already established buyers. So that was the run on liquidity. This is price pushing up so much, and then coming into this week, we had some sort of CRT movement here that prompted us to sell from the first week of January right up to last week, and price obviously met the target. Now price met the target, and then we had a bullish setup. That was last week. I sent a bullish a buy setup on GU, and price has moved even more than my expectations. So as of now, price is heavily bullish. Now these sales were basically coming in from this supply zone. So if prices disrespected it, what am I expecting? I'm expecting a retest and then a push to the upside, or a continuous push to the upside. Then I watch and wait and see how price reacts the moment it takes that level. Super easy, right? So that's it. So everything equals waiting. Yeah, if we have a pullback, fair enough. If not, we watch and we see what price does the moment it goes for this. Super easy. Let's go straight to daily time frame. So this is daily time frame, and here we go. Price was on this demand. Clean buy from there, especially yesterday, Friday. It was so much, like the buy was really strong. The momentum was a lot. So whoever traded yesterday, kudos to you. You made a lot of money. Exactly. So we have this as now a current break of structure, and like I said, this here was a supply zone which has been violated. It's basically going to act as a break and retest zone if price has to come back here. So if price comes back into this level, the moment it aligns bullish, that's your sign to buy GU till it takes the yearly high liquidity. On the 4H time frame, I'm not going in for refinements. I just like to leave sometimes these zones as naked as they are, because sometimes too much refinements just spoil the whole thing, and then you get to miss a lot of setups because you are waiting for certain magical key levels to be mitigated. So in here we have the fair value gap, we have the daily demand zone. So if price can make its way in that zone, and then we have buyers coming in all over, we're going to buy. But then if buyer pressure just continues to come into the market continually, then I will just wait and watch, see how price takes the yearly high liquidity, and then if there is a reversal, fair enough. If there's no reversal, I'm still going to be on the bench waiting. So that is for GU. Let's go to Swiss franc. So this is the Swiss franc, meaning USD CHF. USD CHF has been heavily bearish, like super bearish. And as of now, price has really rated the yearly low. Yeah, that's how fast or that's how weak the US dollar is compared to the Swiss franc. So as of now, we have this as closest drawn liquidity, which is the low of 2015. Yes, so if this guy has to come for this, then it will be like some sort of very big SMT divergence between all these dollar pairs, because euro cannot even reach that point right now. Okay, but then that's the closest drawn liquidity. We watch and we wait, we see whether price is going to take it or not. Let's go straight to a monthly time frame. So same thing around the zone from May right up to now, price has been in some sort of accumulation. And then you know what happens when we have an accumulation? We have an accumulation, we have a manipulation, and after that we're going to have some sort of distribution. So I feel like AMD is coming to play. Like AMD, I'm trying to visualize AMD. Okay, yeah, so maybe this first quarter of the year can be bearish, and then the second quarter can be super bullish for the US dollar index. Fingers crossed. So right here, this is what we have. We have a run on liquidity above this. That was in October, and then the month of December obviously closed as a break below this, leaving this guy as a supply. Now, one other thing, this month price did not go for December's high. That's SMT between that and Euro USD, I believe. Yes, so as of now, price clearly reacted from the monthly supply, and we've been pushing down since then. So how far can price go? Let's look at it from the weekly time frame. So this is weekly time frame point of view. As of now, this is some sort of, that was a break, and then all of this was basically a retest. And as of now, prices, like, things are getting really serious, because we also have this level as a weekly break of structure. So same thing I told you guys, if price has to come back into this zone as a retest, we are going to sell, meaning if price finds its way here and later on aligns bearish, we are selling, and the drawn liquidity will basically be this low here. That is the low of 2015 if price gets there. So weekly time frame heavily bearish, and you don't need to counter trend that kind of movement. If you try it, then you're going to go mad. Now there's this trend line around this zone which I've been talking about, that was basically liquidity. From the third trend line, I was already looking at it, and then prices respected it the full time, which is something really strange, but then it is what it is. So as of now, I just feel like this wholesale movement is a run on liquidity or some sort of manipulation, and then after a while we're going to have a bullish dollar. So fingers crossed this week, like I said, fingers crossed. So if price has to come back into this zone, then fair enough. Like I said, we are going to sell the moment it aligns bearish. If not, then we are going to attack option 2, which option 2 will be maybe more sell pressure to the downside, and then later on we have buyers coming into the market. So we just have to wait and then watch and then see what we're going to have. But then that's for the US dollar, US dollar plus Swiss franc. So let's go to UJ. After UJ, we're going to look at Xau, and then we are done. So this is UJ. Let me take all of this. Now UJ has been heavily bearish, like super bearish, since price took out the yearly high of 2025, which is last year. UJ has been on a downtrend. Now, when price took this out, I just knew that there is no way price is going to clear that area and sellers don't come in. Now, structurally, from the monthly time frame, you will see that this whole zone is basically a supply, and then the yearly high was just acting as some sort of liquidity. Now, if price is taking out that point, what do we have as internal range liquidity? We have this fair value gap. So UJ could really fall this week or this coming week right down to 152. Yes, price could come back to this point. Yeah. And this is demand here. So this is just the only buy zone which I see it as a potential area where buyers could come into the market. As of now, there's none. So let's just take this out for the moment since we are not looking for a buy right here. Then I'll leave this guy as our potential TP. So this is what we have on weekly. Weekly ended really bearish. Told you guys we had a weekly CRT. That was last week. Like I said, if you're not in my Telegram handle, make sure you're in my Telegram where you get all these markups for free. Yes, it's all for free. So that was a weekly CRT. Price is taking out the CRT low, not as even a run on liquidity, but then as a break of structure. So what do you mean? A retest add more sell till price takes the monthly fair value gap. So if price can give a very great retest, then I will join the sell train for USD JPY. But then if not, then we are just going to see how we'll enter. Okay, yeah. So daily time frame, this is how daily time frame looks like currently here. So when price took out this yearly high, let me take out this zone a second. Now when price took out this yearly high, we had price creating, that was like the high of the week on Wednesday, and then price kind of aligned bearish, giving us the zone as a single candle order block acting as a supply. And then you see what happens, massive sells to the downside. So if you see this, you will understand that supply is basically in this market, and if supply is here, then do not expect very deep mitigations. Do not expect OTE mitigations. We're going to have some sort of like very slight retest like around the zone which I've marked, and then we have more sales to the downside till we take out this monthly fair value gap, everything being equal. Now on the 4H time frame, what do you see around the zone? I see a fair value gap. So that's a 4H fair value gap inside that daily time frame sell zone. So if we could get a slight retest, price mitigates that fair value gap, aligns bearish all over, then that's a massive sell. Like that's a sell to the downside. So hopefully we get this. So overall this week we're bearish on the US dollar index, we're bearish on USD CHF, bearish on USD JPY, we're bullish on GU, bullish on EU. Now let's go to XAU. Now, XAUSD has been on fire, like it has been on fire. Last week when I did this analysis, price was, let me check back to the daily time frame. So price was basically around this point, and I said just us having this mitigation of this fair value gap, and then this whole supply turn demand, that's like a break and retest. This area will push XAUSD right up to 5,000, and price is almost touching 5,000. Yes, so that's how much XAUSD has moved this week from around 4,500 to almost 5,000. That is massive, meaning if you were buying XAU this week, you are you're in massive profits. But then if you try to counter trend XAU, trying to sell XAU when dollar index is weak is like you saying RIP to your account, and you don't do that. Now this is monthly time frame XAUSD. Now last month of December, price was trying to give like some sort of sell movement, giving you, oh, price could sell, but right now currently in the economy, trying to sell XAU long term is madness. Like you don't do that. Now this is what we have currently around this zone. When December, or when price ended last year as that contraction candle, one thing I told myself is I want to see price below this. If I don't see price below this guy, then I will continually be bullish on XAUSD, and that's just what happened. You had a retest around this zone, and then price still ended up closing bullish above that, and then there you go, more bullish price action. Now when XAU keeps making new all-time highs, trying to give like trying to say that this is our exact TP is very, very difficult because price keeps just making new high highs. So the best thing you could do is, if you don't know how to trade this market, or if it gets so difficult for you, just leave it and go somewhere else. But then if you think you can do it, fair enough. From Monday right down to Friday, we have 5 days of continuous bullishness. So what are we expecting this week? More bullishness, except we see sellers coming and then we start, maybe we have some sort of small sales. But then if not, nothing. Now, if dollar index doesn't gain strength, do not try selling Xau. Like I said, if the US dollar index doesn't gain strength, meaning if buyers don't come in on the US dollar index, trying to sell gold is madness. Okay, if the dollar keeps getting weaker and weaker, which is that's what's happening currently, then we will keep buying and buying and buying and buying Zao. So all you have to do when trying to trade this kind of market is move to your lower time frame. Okay, do not buy when price is already when price is already on an impulse move. No, wait for a correction and then wait for price to align bullish and then you go. So that's how you trade it. Just wait for price to do a correction move. The moment it aligns bullish, you take a trade. For example, this was someone you would have taken maybe on Thursday. This is that which you would have taken on Friday. Clean mitigations, it aligns bullish on the lower time frame, you buy. Same thing here, clean mitigation, the moment it aligns bullish on the lower time frame, you take a buy. So that is for gold. As of now, I wouldn't mark out any structure because I will not mark out any structure because we're heavily bullish and price could keep pushing to the upside. So as of now, we're going to leave gold be. That's the best thing I could tell any person. And recently, the market is super volatile, and the volatile market doesn't suit every kind of trader. So if you're the kind of trader that's not used to trading in a market like this, please just stay off and come back when the market is way stable. Okay, yes, but then if you like volatility, if you like to trade in this kind of environment, then that's it. So you guys, in the month of February, we are going to be relaunching our beginners program from scratch, like learning forex from scratch. If you're a beginner, you want to learn forex, or if you have some other guys around you that want to learn forex from scratch, then tell them in February, excuse me, in February we are relaunching our forex trading from scratch program and even our intermediate program. So um do well to join our Telegram handle. And if you want to leave me a message on WhatsApp, I believe this is where you could get to me. All right. So, excuse me 1 second. So, that's my handle. Perfect. So you could do well to leave me a message on this on WhatsApp, or do well to integrate a Telegram handle. When you integrate a Telegram handle, there's a pinned message just above. Integrate a group chat, and from there you could leave me a message. So have a nice weekend. Our live sessions continue this week on Sunday, live on TikTok. So do well to follow me on TikTok, and we'll continue moving. So you guys have a nice weekend. Enjoy yourself. Bye.